Welcome back, friends. This is a recap of the trades I took last week. All right, and then the trade I am going to take this week. Just like I am making an analysis now, I found out a particular setup that I would want to share with us. It's looking very promising, so I want this to be on record. All right, so this is AUD USD, and I'm on daily time frame. And well, I wouldn't want to waste much time in this video, so please do all to like, subscribe, and share the video. Don't forget that. So starting now, this is AUD USD, and on a weekly time frame, it looks bullish. It's very much bullish at this particular point. Having looked at the draw on liquidity and then the immediate price buying into a key level above, right? So it's looking bullish, but overall, I think this trend might be on a bearish. So I'm trying to counter trade on a weekly time frame, but basically I'm using the lower time frame. All right, so weekly time frame we're looking at buys, daily time frame we're still looking at buys. All right, so this is basically telling us how fractal the market is. Fractal, I mean, is whatever happens on a lower time frame happens on a higher time frame. Basically, the market delivers price to a higher time frame. So a 4-hour time frame now, I'm looking at quite a view, a very good structure at this point. All right, so looking at this particular setup now, I already told us the direction of the market, which is a bullish trend. I would want to come back and let's start marking out the mitigations around these points. So I would want to just skip to the part where I tell you what I did and how I got this particular entry. All right, so having understood my order flow, which is uptrend on the higher time frame, came back to a lower time frame, which is the 4 hours. And from the 4 hours, I want to identify my break of structure, which is this break of structure first, find out the mitigations, and then the next key level to be mitigated. So when this kind of thing happens, when there is an impulsive move, and then eventually the market comes back and becomes efficient, basically this place is invalidated. Let me recap. When we have an expansion, then the market doesn't immediately come back and refill that expansion, and then continues and creates an efficient price. Just continue from the efficient price, because there is no way the market is coming back to that particular zone anytime soon in order to fill it up. So yes, that is exactly what I did here. Market created a fair value gap here, an expansion, and then a little bit retest and a continuation. When it created a continuation and the efficient price action, when I say efficient, I mean this was the high, and then market came back down deep into that particular zone and even mitigating another block here. Both the fair value gap and the other block was mitigated properly. All right, so this is an efficient price, so there is no business I have coming back down into this zone again. Basically, I am looking to continue my trades from the efficient price action. All right, so having this, then having the market come back into this again to mitigate, I already know that, okay, these zones have been mitigated and there is no business of the market coming back into this place to mitigate it again. So the next thing I would want to find is an inducement or the last low before the break of structure. The last low before the break of structure, and where I found it was at this particular zone. This was a pullback before the break of structure. So I'm tagging this inducement, and eventually there was the last break of structure here at this zone. All right, so after the break of structure, what I'm looking at now is a retest into my key level. Now the reason why I picked this place as a key level was it is the only pullback that has not been mitigated by the market. Let me say it again. Every other zone here, this place was invalidated, and eventually the market is inefficient. And then it came back down and validated this other block, and market also came back and validated this particular other block. So this last pullback is the only zone that has not been validated. So I picked this as the entry, and then set my other blocks and my entry on my order. You get my limit order on my MT5, and eventually I was not looking to target this particular high because I know the market might reverse any particular time and then take me out. So I targeted this zone, taking my entry from here, basically setting my stop loss slightly below that this low, because this low is the protected level. I'm setting my stop loss slightly below the low. Then I would wait for the market to retest, and once it comes back and triggers me, I set my take profit at this liquid zone, because I know that the market might not actually go that far up, although it might, but not at the particular time. Okay, because this is a liquid zone and market will come and sweep it, come and rally around it before it now continues. Eventually, how I used to do it is I have this psychological trick where I know that at any key level, I know the market might come and dangle a bit between it. And if I don't want to hold trades too long, I close it, or I take partials, or I set break even, or I even trail stops, depending on whichever I feel comfortable with at that particular time. So I felt comfortable with taking my profits from there. So yeah, I did. And then after everything, I waited a bit, and eventually the market did what I anticipated, which is rallying around that place, and eventually caused a retracement into this immediate order block that is here. Okay, this is mitigation I'm talking about now. Cost the mitigation into this particular zone. Now, if you look at other blocks, there is one thing about other blocks that the market usually pick a lot. The morning star order block, that is what I'm trying to talk about now. The morning star order block is a very important entry. Maybe I should talk about it separately on another video, but for the sake of knowledge, for the sake of this particular video I'm already discussing, let's speak a bit about the morning star order block. So this is what the markets usually do most times. Okay, if we remember our candle theory, that's our candlestick patterns, you remember that when the market forms a candle and then eventually creates another bullish engulfing, that is this pattern now, when there is a little sell candle in between two buy candles, now we're going to take this whole zone, basically marking this whole zone, that is from the previous candle and then the last one, as our entry. Reason is because firstly there was a bullish engulfing, and the bullish engulfing covered the whole two candles behind. Okay, when the market is coming, the market might not really come back down. Market might not really come back down into this particular zone here. Rather, I might just take from these two candles now and move. So it's something that has been studied over time, though I've actually looked into it a lot. And it's the morning star order block entry. Okay, and it's very efficient. If you look at the charts, almost everywhere you'll find it. So that's the same thing that happened at this particular place. At this zone, there was the previous candle, which is the sell one, and then the buy, and then the bullish engulfing next to it. So yeah, the market, I would want to pick from the body to the close of the second candle, I mean, and then I set my entry and I'll wait. Eventually the market will come back down, mitigate, and after this mitigation, I think it's forming some kind of doji candle around here and probably a continuation to the upside. Then I would target, this time around, I'm targeting the extreme high, because market has taken every liquidity from this zone. So what I'm targeting now is this particular high, then setting my stop loss slightly below the invalid zone. So yeah, this is how I would take this particular entry, and this is how, and I've already discussed how I took the previous entry and how I've been checking on AUD USD and seeing the patterns the pair forms. Now this pattern is repeated over time. If I go through previous charts now, you can still even find the same thing. If you go through this one, you can see that this is a break of structure. I'm just doing this for reference purposes, particular one now. Doing it for reference purposes. Okay. Can find this broker structure and then a liquidity sweep. Liquidity sweep at this zone. Okay, I did have a liquidity sweep at this zone. And also, okay, here now is the morning star candle where eventually I want to pick from this particular zone. Okay, the market came back down, retested, and continued. Okay, after this, there was a retracement into this zone and then a continuation. All right, so this is something that AUD do over and over and over and over again. So it's not quite a new thing. It's repeated, and this particular setup has been one of my most profitable trades. Has been one of my most profitable setups, which is this. Sorry, let me map it out so that if you want to screenshot, you can screenshot, and if you want to draw it, you can draw it. Okay, market now give some kind of liquid zone here, and then a continuation. And when it comes back to retest, it probably will sweep this whole zone. Probably will sweep this whole zone, and when that sweep happens, there is a very impulsive move to the upside because eventually it took liquidity. And liquidity means money, orders. Okay, so this is DXY, and I'm analyzing DXY because I use it in correlation with Euro USD. Basically, I cannot trade DXY on my own personally for personal reasons, but I use DXY in order to know the character that Euro USD will play out next. So once I'm done with DXY, I'll go straight to Euro USD so that we can compare the two and see how the two work hand in hand. Alright, so thank you for watching. Do what to like, subscribe, and share to your friends. Alright, so from 1 week time frame, I am looking for my order flow on DXY and it's on an uptrend. Uptrend on DXY, the opposite to be on Euro USD, which is downtrend on Euro USD. If it's confirmed, let's go to Euro USD and check this weekly time frame. And as you can see, Euro USD is on a downtrend. I'm just basically trying to show the correlation of Euro USD and DXY. So yeah, uptrend on DXY, Euro USD on downtrend. So back to DXY, I have this particular structure which is an uptrend, and I'm targeting this zone and this zone. And once it keeps buying, Euro USD will keep selling. So I'm more interested in taking trades from Euro USD. So this I use for confluence purposes, for correlation. Alright, so going down to daily time frame. Sorry, I'll be breaking down this video so that you can see how I actually did spot on entries from DXY. So at this zone, I had a key level, but I'm not looking at this because it's on a weekly time frame and it takes quite a long time before this actually happens. So I'm looking at the immediate price, so avoiding all of this noise. Let's go to the immediate price. Okay, firstly, we know that the market has triggered at a key level on the weekly time frame and also on the daily time frame. So what we're looking for now are buys from that zone. Okay, and from a daily time frame, you can observe one thing. That thing is, firstly, there is a change of character. There has been a change of character from a downtrend to an uptrend. And you can see from this last low, this last high, sorry, that caused the break of structure. And then the market sweeping that high. Okay, this is a pullback, which is an inducement. Market sweeping that high. Inducement is the last low that caused the break of structure. Market sweeping that high and a continuation or a retest into that zone. Okay, this is also a sweep, and then continuation above. So this is a structure to show that we've migrated or we've shifted from a downtrend to an uptrend. All right, so having known that now, we have confirmed two things. First is our order flow, and second is our shift. So having confirmed our shift, the next thing we want to look at is break of structures. This is a break of structure on the daily time frame. and this is an inducement on a daily time frame, and this is our order block, which we're looking to pick our entries from on a daily time frame. And eventually these three things has been checked, and when these three things has been checked, the next thing that will happen is the market moves. All right, so 1 2 3, and the market, boom, pumps up immediately. Okay, so from this point I didn't actually take an entry from here because I was trying to observe, to wait a bit to see what the market will do, and then this was what the market gave me, and then a continuation to the upside. So going down to 4 time frame, I would observe something very important. On the 4-hour time frame, the market continued to give me the same structural play out, the same pattern that the daily and the weekly had already given me, which is the break of structure and then the inducement and entry eventually. So here I got my entry on a 4-hour time frame to take this trade, and then this was the break of structure, this was the inducement formed, and this is my entry, and I took this particular trade. Okay, I set this limit order, but I didn't take it on my MT5 personally because I don't trade DXY. I rather use it for correlations. So yeah, whenever DXY is buying, XA is selling. Alright, so this is the target. This is the target right here. But I think the market is still going to break above it because on the weekly it's showing bullish. Alright, so it's still going to break above this target. Maybe looking at it further with time, I'll now find out a retracement. Whenever it retraces, okay, I would go and buy on EURUSD. So whenever I see retracement here, I will know that EURUSD is already buying. Okay, so this now, after a retracement, a continuation to the upside. All right, so I believe this circles everything you need to know about correlation and how I took my entry from on EURUSD using the correlation method on DXY. Okay, so this candle, this pattern also is something I would want us to look into. This pattern, the inducement, the sweep, and then this part where the market doesn't come back down to sweep this place, rather it takes entry from whatever mitigation block that is around here. Okay, I would want us to look into it very well. Go to your charts, you'll find a lot of this there. So look into it and backtest and observe the market characters. Believe me, you would improve your trading journey. I already said this before. Trading is more like a personal journey. You have to improve yourself in order for you to connect with others. So do well to improve yourself skillfully over and over and over again. I used to listen to a podcast and they said that obsession beats talent. All right, so being obsessed with it over and over and over and over again basically registers it into your mind, and subconsciously you will just come on the charts and start analyzing, and eventually everything plays out. You get, so do well to backtest, do well to review your trades, do well to journal, and at the end, believe me, you are going to be very profitable. See you at the top, and thank you for watching.